Hello and welcome to the week ahead video. A couple of risk events to account for over the next 5 trading sessions. Starting off with the continued focus of the global marketplace, that is the Federal Reserve. We have a number of speakers due across the next trading week with the likes of P&L Alto, Williams, Lockhart, Fisher and Powell, just to name a few, speaking from the Federal Reserve, likely to throw their 2 cents into the hat and give their opinion on how Bernanke addressed the FOMC rate decision last week, which has been perceived as less than dovish. The continued suffering in the US bond markets has continued with early trade on Monday, seeing their 10-year yield top 2 spots, 6%, marking the highest 10-year yield in the US since 2011. It's also seen that price action being mimicked in Bund futures, which have continued to sustain downside from the open on Monday, so look to see if this trend is sustained over the next 5 trading sessions. Looking out for any indications there from the FOMC speakers on any divergence in opinion on that QE outlook. But elsewhere out of the US this week, on Wednesday we see the third reading of US GDP, currently expected to remain unchanged at 2.4%, so potentially not too much of a catalyst for price action. However, on Friday we have the University of Michigan and Chicago PMI figures, always very closely watched. But elsewhere on the other side of the globe, the Chinese liquidity concerns continue to remain rife, easing on Monday slightly. However, the PBOC have indicated that they are not going to give banks any breathing room, so they do have to deal with those liquidity issues on their own, so really tightening the restraint on the banks over in China to more responsibly deal with their capital and manage their lending to the shadow banking sector, something which the central bank in China has been particularly strict upon over the past week or so by saying that they are looking to punish banks for their shadow bank lending. But elsewhere, over in the Eurozone, quite a few important German numbers we have already seen on Monday. The IFO number coming in line with expectations. This is followed later in the week by the CPI figures, with the outlook on the ECB currently being that they have little room to move on their monetary policy at the moment, but this picture could change as we progress through into the second half of 2013. But finally, this week does mark the last in place for the head of the Bank of England, Mervyn King, soon to become Lord Mervyn King, as he does step down at the end of the week, with Mark Carney replacing next Monday. As one of his final acts as the Governor of the Bank of England, he has signed a currency swap deal to the tune of around 200 billion yuan with the People's Bank of China, the first deal made between the Chinese state and a G7 country in history. So we'll look to see how this can affect the FX markets over the next 5 trading sessions. But as always, we'll bring you all those key releases as soon as it hits the wires, as well as any other relevant commentary to your trading. In the meantime, that's all from me. Make sure you have a fantastic week.